Welcome to Bullish and Beyond. It's Beery the Bull. I'm your AI co-host. Join myself, Brian the MacMan, and JT Knows Things while we dive deep into the world of stocks, crypto, and how to live a bullish life. It's time to get bullish, and there's no better place to start than right here. Let's dive in.
Hey everyone, welcome to another incredible episode of Bullish and Beyond, where we are bullish about all things stock, crypto, and life.
Let's go.
I'm so thrilled to have a special guest with us today. His name is Brad Zapp, and our guest is someone who's rewriting the rules of venture capital. So meet Brad Zapp, the founder, president, managing partner of Connetic Ventures. And Brad is not your typical VC. He's a CFP turned entrepreneur who built a path from running an advisory firm with hundreds of millions in assets under management to launching a digital, data-driven venture fund that's aimed at democratizing access for founders everywhere. He also co-founded Wendell. It's an amazing AI-powered engine that upgrades how deals get evaluated and how biases get disrupted. Check it out, and you can put your fund through there to see how much it's worth. Also, on top of that, he's a board member, a community champion, and someone who's always pushing to build smarter and fairer systems. So let's jump in, unpack his story, his bets, and how he envisions the future of startup investing. Welcome, Brad.
Thanks for having me. Excited to be here and chat with you too.
Yeah.
So you've done so much in your life, and now you're running Connetic Ventures, which we just learned is a publicly available fund now. So exciting. Would you tell us what Connetic Venture is and how you got into that?
Yeah, so at our core, we're a venture capital firm. And what that means to people watching is we buy stock in private companies that are not available for purchase on your traditional brokerage accounts. So there's roughly 3,700 public stocks, which is way less than people understand. There might be 7 or 8 million private companies in America. Most of them are really small. But if we were to look at companies that were, say, 100 million and up, there's roughly 17,000 at least companies that make 100 million more in the private world. And there's only 2,700 of that size in the public world. Point being is it's a really big sandbox, and we help people pool capital, create a fund, and then we source, underwrite, and allocate to these private companies that's really hard to get from your broker or advisor.
I love that.
Yeah, that's a really cool high-level summary of what you do.
And a lot of those companies are in and around Ohio and Kentucky?
Yeah, they're everywhere. I mean, a lot of people, and myself included, when my background as a CFP, I was a financial advisor, and we were, managing money and putting together model portfolios for, clients. And I thought the stock market was the whole world. And I thought private companies was just something that happened in Silicon Valley or Boston and New York. And that's true from a major hub. But, Cincinnati, my hometown, we just had a startup Cincy weekend, last week, and we had hundreds of startup companies ranging in value from, a couple million to a couple hundred million that, were around involved. And that's one city. There's at least probably 100 cities the size of Cincinnati in America. So they are all spread out. They are everywhere.
But you picked Kentucky to launch your fund.
No, sadly, Kentucky picked me. I was just born here.
Oh.
And then I had kids here, and so I'm really anchored here. I love Kentucky, and we do some things in this state, basketball and bourbon, better than pretty much anywhere.
I like that.
That's
but
true.
Venture isn't something that we historically have been great at. The good news is, we live in a digital world, and so this is the type of work that you can do anywhere. It doesn't have to be a retail, driven model. But no, I didn't pick Kentucky. I love Kentucky. I was just born here.
Yeah.
Well, speaking of bourbon in Kentucky, we have a mutual friend, Brad Bonds, that runs Revival Spirits up the street from your venture fund. How do we get his bourbon publicly traded? I think that's something we should work on.
Well, he could go through the same process I did and register with the SEC. And so I'm sure that we could do that. But in the meantime, at least where I'm sitting from, I can just walk down the street and partake. He probably emails me every other day. But Brad, that guy,
That's
you know,
so funny.
well, the bourbon market, I think, is something that's very similar in some respects to the private stock market, which, private companies. Brad knows more about vintage bourbon than probably almost anyone in the United States, because it's very niche, it's very
Yep.
boutique, it's really hard. Like, everyone knows Makers, and Woodford, but Brad knows them all, and he knows the origin stories of the recipe, the brand, the distillery, the master distillers, the years that were important. And there's less publicly available information, and that's probably why I like it. It's kind of like what
That
we do.
arbitrage on the bourbon market is similar to like the stock market. If you have more information than the public has, you can make better decisions.
Yeah, of course. The problem is Brad says this is worth $300, and you're like, is it? I don't know.
Well, speaking of making decisions on the value, I know you help co-develop this Wendell AI, and that is helping create value for companies out there, so they can see what their company's worth and hopefully lead them to you. Is that how it works?
Yeah. So Wendell is a digital venture associate. So the way a lot of VCs work is they have associates, analysts, and scouts that are out there in the world physically, and they're going to various in-person events or pitches or coffee shops and meetings, and they're trying to figure out what company's interesting to send back to the mothership at the home base. So again, I'm from Kentucky, and that's not going to be a successful model for us. So what I did was we developed this. We were using AI before AI was popular, so we created a AI bot. Its residence is in the cloud. You can access and talk to Wendell without any warm introduction. So if you're a startup in Arkansas, and you're in your living room right now and you really need some money, you could go on your phone, open an account and talk to Wendell, and Wendell will take every founder CEO through a interview process like a human would. It'll take you through a battery of psychometric assessments, which makes us unique. It'll grab some of your documents. If you have them, it'll read those like your pitch deck. And then Wendell automatically, he does instantaneous analysis and it scores it. And what it's trying to predict is, does this company look like prior companies that have gone through our engine that are successful? Or does it look like companies that are not successful? Or is it confused and it doesn't know? And those are the three buckets. And so Wendell's our version of a warm introduction, because it takes the companies that it believes will be successful and it says, hey, Brad, I think you should talk to this company. So, and then we do. So to put it in sheer numbers, let's say
how many applicants are you having come through Wendell in a year?
So let's say the humans out and about, we have access to, maybe, 6,000, in a year. And I would say out of that, about 2,500 will actually fill out and have a conversation with Wendell.
Okay.
And that would be hard. I mean, how many analysts and underwriters would I need?
You need a full team. You have 10, 15 people. I mean, yeah.
So what Wendell does is it takes that down to,
there's good ROI on Wendell.
Yeah, it takes it down to maybe, 100 or 200 on the whole year divided by 12 months. And then we have 3 human VCs that divide that up. And it allows them also to spend more time with each individual company, because they're not so inundated. That's right. Wendell takes all the inbound, and that inbound applies that pressure. A lot of the other firms, take it like this. If you say, well, the only way you get to talk to Brad is with a warm introduction, that means without even looking at a certain company, I've said no. And you've created a bias just in your own network effect, right? Like, where do I live? Where did I go to college? Where do I vacate?
That's why I mentioned you help remove that bias effect. I mean, I had that problem trying to get a job out of college. They said I didn't go to an Ivy League school, and that was an issue. So it's like, you're looking at raw data. It doesn't matter what city someone lives and how they grew up. It matters what their company is doing.
Well, if you think about Like let's look at professional sports. And I relate to sports because I love sports, watch a lot of sports, and just look at the geographic locations. Pick any sport. Literally, if you mapped it out, ChatGPT could do it for you, and you would see. Guess what? It miraculously, not every great basketball player is born in Kansas. They're not. They're born everywhere. Right. So it doesn't matter what the talent is. It could be musical talent, right? It could be business talent. It could be athletic talent. It's
They
distributed.
come from a small hometown you never heard of. Yeah.
Yes. So you can't say,
Right.
well, all the great entrepreneurs are in San Francisco. That's ridiculous in, a country the size of the U.S. And so that would be
Yeah.
you would just be overlooking too many talented humans. And so, look, we don't have a perfect process. We think we have an amazing process. We're not going to let perfection get in the way of amazing. And we're trying to do it a little
like
better
that.
to
I like
reach
that a lot.
talented founders wherever they're at, period.
Has Wendell changed a lot, over the years, seeing these upgrades with ChatGPT, from 3 to 4, now to 5? I mean, I'm very impressed with ChatGPT 5. Is something like that running the back end of Wendell, or is it trained on some different type of AI, or how does it work?
Yeah, so sure. I mean, when we started, like V1, it was like a form. It wasn't
I
artificial
remember
intelligence.
forever ago, I think I actually went into Wendell at one point with Sell Your
I did
Mac,
too.
but I wasn't able to complete it, I don't think, because I wasn't, making enough money. My, didn't make sense what I was bringing in compared to my brand value. So I think maybe I stopped there.
Yeah. So we went through the first archaic text and forms and downloading into Excels, and then
Okay.
we eventually got into real coded tech, and then we created a data lake, and then we started using machine learning. Big learning curve for me. I was shocked at how much data you needed to make machine learning effective. So we had the system set up for that. Didn't work right away. But then the good news is, over time, we've got so much data, it works a lot better. And then the luck, you get these LLM models, which are awesome. And since we already had a tech platform, it's easier to just plug them in. And so things like, in the private world, when compared to the public world, typically when people buy a stock, they don't do a lot of reading. They're not reading the corporate charters, right? They're not reading, the different agreements. They're not reading, the employment contracts. But in the private world, when you underwrite or you get ready to close,
You better read that stuff.
Well, yeah, but here's the problem. It's anywhere from 300 to 1,200 pages.
Right. That's what you have your AI for.
That's exactly right. And so those type of improvements are here and now. So when we do diligence, you just feed all the documents and it writes a summary and it tells me, do I need to dig my heels into anything? Is something not normal?
Here's a red flag.
Missing.
Look at this one document and you can dig in on the one document and skip the rest.
That's really neat.
Yeah. I mean, again, that's the promise of, you and I were talking offline on your AI bullish case on the efficiencies, because otherwise I'd have to have an army of analysts, and those type of things are very real. And so now Wendell changes at a much more rapid clip than it ever changed before, which makes sense.
That brings up a nice little segue into that exact outlook. So you just proved that jobs are not looking good for venture analysts, at least at your firm. I mean, how many analysts are you going to hire to fulfill what comes through Wendell? Just as an idiosyncratic example. Just
how many people can Wendell emulate? Is that what you're saying?
I'm saying, how many deals do you need a VC for? You say you have 3 for $2,500 a year. Is that a good ratio? So 800 for every one analyst when it used to maybe be 100 per analyst?
Yeah, well, I'll say this. We could 10x that, and I would probably only hire one.
Wow.
That's what I was thinking.
It's getting that efficient.
Yeah, I mean, we're not going to let perfection get in the way of amazing.
And your industry is obviously playing with big numbers too. It's not like it's some low-level job that has a, low meaning dollar
No,
amount output. I mean, you're talking
no,
about millions of dollars decisions.
yeah,
Smart
yeah,
people.
no doubt.
Yeah.
Yeah. Top of the barrel kind of people, for sure.
Yeah, I mean, we think a lot. I I come from a banking family, so my dad, well-respected banker, had a publicly traded bank on the Nasdaq. He ended up selling
Bank of
it.
Kentucky.
Yeah, that's right. Sold to BB&T. Real proud of that. But if you think about the banking industry, and a lot of people,
You
they're
got
like,
banking in your
oh,
blood.
well, they don't think of banking as like innovative and amazing, but they're so wrong. If you think of, so my dad, when he started, he had this trailer, a double wide trailer that sat
Okay.
on a hill in Boone County, Kentucky, in the middle of nowhere. And I asked my dad, I said, look, during those first 2 years, and he had a small team, I don't remember the numbers. I said, but how many commercial loans, mortgages did you process in that year? And he said, 600. 600. Well, how do you do that? Well, they had some technology and a perfect process. And I thought, if a bank, a Kentucky bank, nonetheless, in the
Right.
90s, can process at that level, or isn't venture just new age at-risk banking? Isn't that what we are? Then shouldn't the model at scale, particularly as tech, why couldn't we process 600 deals a year, which would be astronomical for a small venture fund? And so that's kind of really our vision is, well, can we just not be, my dad always said he's a poor country banker. I'm like, we'll just be a poor country VC and we'll do 600 deals a year. And we
That would be
think
insane.
we think in terms of scales, and that's why we like technology, because it's hard to scale humans, but tech is a lot easier, and that's just in our bones.
Sounds like you got some big goals. Are you trying to scale to this 600 plus level here in the near future, or what kind of goals have we got for Connetic?
Yeah, I mean, absolutely. I mean, that's you got to put one foot in front of the other, and we're really far from
Sure.
that. And that's the reality. But part of
Having that vision is key. I mean, you're the
gotta know where you're
co-founder,
going.
managing partner. You got to tell people where we're going, and you got to set it to the moon.
Well, I think those big vision is, what could attract money. Because if you're just raising a $50 million private fund, then you're just thinking about allocating $50 million, and maybe you're going to do 2 million and 25 deals, right?
Right.
Do you really need efficiency to do 25 deals over 3 years? You do 8 deals a year?
Probably not. No. Hire one
Okay.
VC.
So that's right. Hire one VC, hire a guy in a backpack in
Yeah.
an office. But if you're thinking in terms of 650 a month, almost 2 a day every day of a working day, well, that's totally different. But the opportunity is a lot bigger if that's true, and that should attract capital if we can.
Now you need to raise $1 billion.
or more. Now you're on.
Yeah.
That's
Right. You're at a whole
that's
new
the
level.
That's why you're publicly available, if I had
That's
to
right.
guess.
That's right. That's the whole point.
Yeah.
Is to be able to do something that hopefully others can't, and attract that capital because we could deploy it.
Yeah, I was going to say, to get to 600, really at that point, it's funds, it's liquidity. You're just like a banker. You need liquidity, right? Itching for some liquidity. You need that capital.
Don't we all?
Of course. I'm the same way. I'm a liquidity fiend, brother. I'm hitting liquidity every hour of the day. I need it. That's my job.
Well, it sounds like there's some regulatory changes that just happened that now it's opening up for other people to get their liquid assets in some of these discretionary closed-end funds that weren't available before. Brad, can you walk us through what these changes are in the regulatory environment and how it's going to affect your fund?
I definitely can. I love this topic, and it's so rare, I think, for anyone to say, "Oh, let's talk regulation and have this be interesting." But this is important for people to understand, for political reasons and for monetary reasons. And so there's typically in the private markets, there's been 2 groups. There's been accredited and non-accredited, and sometimes they call the non-accredited retail investors. And there's rules around that, but let's just say there's wealthy, high net worth, and non-high net worth. And high net worth, for some reason, are allowed to buy more stuff that aren't necessarily registered.
Because there's higher risk.
Well, there could be higher risk. There's usually
that's a
less.
Theory.
That's a theory.
Okay.
if it was measured, I don't know that that's true, but
Okay.
typically it's because they've not gone through a regulatory process with the Securities and Exchange Commission. And so they're just private deals. They're, they file for an exemption. They have all this, so there's not a lot of information. There's kind of
exactly like my hedge fund. If you've been listening to how I
exactly.
It's the
Got
exact
it.
same
So back when Enron and WorldCom, I think it was in 2002 or whatever, when they failed because of fraud, that right on the heels of that, Congress was all like crazy upset, and they wanted to over-regulate everything, and they came out with this Sarbanes-Oxley. Well, under
Big
that
government.
under that environment, what happened was the SEC, which is a bureaucratic agency, right? They're an extension of Congress. They started making comments in SEC examinations and mutual fund filings on public registered products that by law should have been available to retail. And they said if the fund was buying the underlying assets were private market instruments, that you can't sell this to retail and you need to put new disclosures, higher minimums, and accredited. There was no actual standing to do so, but because the culture of America at that time, everyone just sort of let it happen. And so and this is complex.
But it wasn't a vote. It's the government just made up the law, so we couldn't choose.
There's no law. They just commented, and everyone was so afraid they allowed it to happen.
Interesting. So kind of self-imposed.
Mm-hmm. And so
I didn't know that.
No,
kind of like
Zapp
141 in crypto. It's just like a bulletin, but that bulletin bank's
so for
ability
20,
does.
So these PE firms, they don't want to get sued, so instead they're pivoting and only want accredited investors.
That's right. Yeah. That's right.
Okay.
And so they just self-complied under pressure. And we got a hint of this in May with the current SEC that, hey, this probably isn't right. And there's been lobbying and all that stuff. And I think it was just a couple weeks ago, Atkins, the chairman, came out and he basically said, hey, the SEC staff will no longer make these comments.
Nice.
And now, and what that means at a high level was typically if there was a registered mutual fund, so they've gone through the appropriate paperwork and filing with the SEC, they were limited if they wanted to sell to retail investors, which is the bulk of America. You were only allowed to invest up to 15% of your assets in private vehicles. And now with this comment, if the vehicle itself is registered, you can invest, I think, now 95%. Now they're going to have to file amendments, drop the accreditation on their paperwork. They may have to update their prospectus for new strategies. But the bottom line is...
So it's not immediate, but it's coming.
I mean, the effect is immediate, and the underlying changes and what some, there's, I don't know, there's probably 800, maybe a little more closed-in funds, tender funds or interval funds that this potentially could affect. There will be new filings, and then there'll be a bunch of products that retail investors can purchase at whatever broker or wirehouse or custodian that they used in theory that will have, a lot of language you'll hear is access or democratization of private markets, and so there'll be ways to do that. Now, there could be some very bad things on this too, and it's going to be pretty.
You tell people to do their research. Don't do your research. You could get wiped out on something you didn't know what it was.
Well, you hope they do, or a lot of times people do what's called performance marketing or just big name bandwagon investing, and so they think if something's got a nice name that has to be good for me. Without really going and looking under the hood to say, wait a minute, maybe it could be good for someone else, but not for me, right?
Right.
And just not understanding how some products work, and I think these should be bought through financial advisors. I think advisors need to get educated on the nuances because that's going to be hard to translate down to the individual clients. I think compliance departments need to understand this. and it's going to be, I think it's going to be crazy. At
I haven't even
face
heard about
value,
this yet, so I'm really appreciative you're educating us on this.
look, it's face value. If you have a registered product, it should be available for retail. But
Makes sense.
registration needs to mean something. And so, I do think the SEC has a duty, to pay attention to what is the underlying strategy, and does this fund qualify, to be registered or not, or is this really a private fund and it needs to stay private, versus just, you don't want a situation where registered funds now are just a layer that is actually a private fund underneath that,
Yeah.
that.
So your
I
fund
would
is
say,
registered, and are you opening it up now to non-accredited investors?
we've always been available to
You have, okay.
to retail, and that's because the type of vehicle that we was one that was given greater flexibility the whole time by the SEC. So we're what's called an interval
Interesting.
fund, and because we offer,
Even though you're invested in all private companies.
that's right. So now a whole lot of different products are going to be able to do similar things. Different money managers and portfolio managers and asset managers will tackle this access problem in different ways.
Sure.
And some will be wildly successful and some won't.
That's a
I'm
really good.
bullish.
Yeah, I would say
I'm
that's a
bull-
really good change, though.
You're bullish on Connetic Ventures?
Well, of course I'm bullish on that, but I'm bullish on the industry. I'm bullish on
Dude.
private markets, and
Yeah.
I know you.
I haven't done a lot of private market investing. I've done a little bit of angel investing, back in the day and stuff like that. But I'm focused, mainly on a lot of the biggest companies in the world, a lot of the really hot AI tech companies. I'm more of like a thematic type trader. And, earlier we were talking, it sounds like you have a different way of valuing, your own business compared to these other, tech companies. If I'm investing in Apple or Tesla, it's, supply and demand driven. So, when people are buying up like crazy, stocks shooting up like we're seeing, these days. The market's really hot, even though it's bloody today over in the crypto den. But you mentioned that your fund has a completely different way of valuing itself on the fair market value. How does that work?
So public stocks are actually not fair market value. And so if we start there to sort of understand like what's happening under the hood is,
Take Oklo. Oklo has zero revenue and they're valued at 20 billion.
Okay.
Right.
So that's a great example.
It's on theory, and it's based on future cash flows, but there are no cash flows yet.
And this happens in crypto too. XRP, they make 28,000 a month and they're valued at 190 billion.
Yes.
It's almost hard to believe.
It's just hype, right? People have a lot of faith, but
in the private markets, the hype happens differently. So in that public market, that's not a fair value. And when people hear you say that, to me it just sounds like, is that a fair price? No, fair market value is a technical term, right?
There's a calculation for this.
Yeah. I'm not suggesting that.
Is it a cash flow calculation or?
It is all the valuation methods. If you're calculating a fair value for an institution, whether it's public or a private institution, let's say there's 5 or 6 different very common valuation methodologies. If you were arriving at a fair value estimate, you would consider the use of all the valuation methods. You would apply one or percentages of several that make the most sense. Yep. And then you would typically use real revenues, industries, for multiples, public transactions, private transactions, and you would have this model, and it would come up with a value that is supposed to represent fair market value that an arm's length, institution might pay for that, in a transaction. And so those numbers tend to be, probably quite conservative, in nature. A lot of times they're not forward looking. They're actually trailing 12 months.
Yeah.
And
that's one of the benefits of the public market. You can get these crazy valuations that are not based upon a fair market value.
Or not a benefit, right? If it
Could
misses,
go either way. Yeah, yeah,
yeah,
yeah, yeah.
a company could do really well, but if it misses its what people perceived is worth. And so that's why you have stock analysts. And people are
Yep.
like, what does a stock analyst do? Or why are they arguing about, do I have a buy rating or do I have a sell rating? And it's because they are calculating what they believe to be the fair value
Yep.
of XYZ company. And they're looking for that
Do you
spread.
do you buy into those analyst recommendations? I feel like it's half time. It's almost the opposite.
Look,
Especially if it's Kramer.
since I'd rather do them myself, which I do for the private market, so I don't have time for the
Yeah.
publics. I'm going to be honest. I own um, I own I own three versions of the same fund, and that's all I own, and I let it do all the work. So I own a S&P 500 fund. What I like two things about
Consistent.
well, I know what I'm going to own, and since it's cap weighted, as take Nvidia for example, as it was getting hotter, I was allocating more and more to Nvidia, and I didn't have to think about it. And I
Yeah.
don't mind the volatility. I beat most people.
Nice pick on Nvidia there. I like that.
Yeah, right. I beat most people not because I'm smart, just because I stay allocated, and market goes down whatever the other day, and I was like, most of my money's in the private markets. I don't really care, but on my public markets, like whatever. That's
all
not
noise.
real. It's not real. That's not the
Yeah.
value. That's a liquidation value, and I'm not liquidating today or tomorrow, and I could care less what the price is today or tomorrow. And the same goes for the private markets.
Yep.
Our values, again, they are typically historically looking, and you got to wait for these. If you own a basket of 100 companies, the value of the company along the way is irrelevant. What matters is, what did you pay for it and what did you sell it for?
Yes.
And the fair
you buy
market
it right,
value.
and then sometime down the road, when it's the right time, and you 10x'd it.
Now you could get speculation in the private markets in a different way, and it's when a transaction or a financing round happens. And so, and this happens more on the coast, but if you have a big, it could be a big growth venture fund, or it could be a private equity fund, and they put, $100 million into a company.
You could use OpenAI as a great example. They just raised another round to help some of their employees sell some shares, and they just rounded 500 billion.
That's right. And
crazy.
so the revenue doesn't support that, but they've got to
60%
grow.
increase in 6 months or something. It's like,
That's right. And so, but they still, somebody, whoever's doing that, expects that they will grow into that and beyond that. So when those financings happen, you see speculation in the private markets. But if there's not a financing, you don't see the prices reflect speculation, because it's not a market, it's just math. So I like to use the term for people and financial advisors that are building portfolios for people. I think there's power in price diversification, because if everything you have is fully liquid and everything you own is traded on one market, then everything you have is going to be correlated. It's all going to go up together. It's all going to go down together. And this illusion of diversification and this illusion, frankly, of liquidity, which is a cult in America, it's not real, right? And there's no real diversification. Is let's take something, some professional artwork that I have on my wall, right? That doesn't move up and down on a market, or my house, or my vacation.
It's illiquid, but it's diversified.
Well, because it's priced different.
Yeah.
I mean,
I like what you said there, because I don't think enough people realize how correlated the stocks in the stock market are. So yeah, like you said, if you have 100 stocks in S&P 500, you're not diversified, because the market accounts for 50% of the variance, and maybe the sector 25, maybe the stock 25%. So it's like, you're just invested in the market.
If the top 11 stocks go up, the market goes up. If the top 11 stocks, most people own 11 stocks, period. They do. I mean, like, I'll look at portfolios that people are paying for and I look at, and they'll have, like, I don't know, 10 ETFs, and you look at their 4 US ETFs, and if you just go to Morningstar.com, anyone can do it, and look at their holdings, they're like identical. And you're like, why'd you buy 10? Why don't you just own one like me?
Pick the one S&P 500 and just call it a day.
Yeah, unless you're like you and a savant, and you're going to underwrite and buy individual stocks. But I think you could just buy a broad-based index and let her rip. if you can handle the volatility on the public markets.
Yeah. I think if you don't have any spare time to do anything like what Brian and I do, that is your best bet always. And it's really important for people to know that your ticker is negatively correlated to the market. And that is something that we talk about here. For long, it doesn't hurt to have different themes if you're bullish AF, as Brian is, or different sectors entirely. Like me and Brian could be very different depending on the context. I invested right now, oil, crypto, insurance. I don't have $1 in public markets. And he has public
I'm
equity.
98% public markets and 2% crypto and 0% insurance.
Right. And I'm like 80% crypto, 20% oil.
I think the most important thing, and I think Brian's going to agree with this, is really to be, take a long view and sort of just to take a bullish view of whatever you are in always. And I do this, my wife and I, we call it building stacks. And so I want to buy different asset classes that are price diversified that I plan to own for the rest of my life. So I literally had a CFA.
Like NVIDIA.
If that's what you're into, you better plan to own it forever. I think the idea of buying something that I hope I can flip in 2 years is crazy. I'm like, what?
Then if people went to sleep for 20 years and woke up with NVIDIA stock, they would be shocked what it's going to be worth. I think it's going to blow people's minds.
Just to accentuate that, one of my things I say in every pitch I do is the best crypto investors of all time actually died. They died with the keys, right? Because they didn't sell. Like if you bought Bitcoin in 2012, died 2013, you're the GOAT. You're up 2,000,000%. You're the GOAT. You beat everybody.
I got to tell you my quick crypto story.
Oh my God, give it to us.
Yes,
this makes me sad.
You said you don't have any crypto, but we're gonna hear the crypto story.
No, I have a little, and I don't have a lot because I'm a fool. And this is why I don't sell anything anymore. I just buy new asset classes. So I don't know the year. You trigger me when you said 2012. You'd have to ask my friend Rye Walker. He might remember. But at some point between 2013 and 2015, we started this tiny crypto experience. So a couple of us put together like $100,000, and we were going to mine some stuff and trade it into Bitcoin. Okay.
Oh my! And back when Bitcoin was $200.
Exactly. It was like $250. All right. So here's the short end of the story.
That's tough.
We didn't do well enough at the beginning. Let's say 100 became 50 grand for expenses and stuff. And so we looked at this as something that wasn't viable. And we said, well, let's just cash out. Okay. Now, everyone but me took cash. And I was like, I don't know what this is, but I'm just going to hold it in a, wallet, forever. And let's say that's, JT, you could probably tell me when this was, but I swear I felt like that was in the spring. And by that July or August, it went up to 4,000. It was like the first big run up. And my little account, I swear, let's say I had, I don't know, 15 Bitcoin or whatever, $7,000 divided by 250, let's say was. And then by the end, I might have 50 or 60 or 70,000. And I thought it was crazy. So of course, I'm like, sell.
Cash it out.
And so in August, I sell. I take my family on a vacation. I pay my tax the next year. But by December of that year, 4 went to 20. And I about died. Just about died.
Yeah.
And you couldn't buy back either at that point because you thought you were priced out.
No. And I might have, you'd had hundreds of thousands at that point. And then I got lucky. Because when, I don't know, February, I go to get my tax form or get my tax information, maybe not a form, and I look at my account, and there's $7,000 in there. I sold everything. And I don't know, JT, what that was. It was a dividend or a fork and I held the Bitcoin long enough that I got this deposit at some point, and I didn't know about it. And that's the crypto I've held ever since.
Okay.
Wow. And it's in the form of Bitcoin.
Yes.
Okay.
Yeah.
I like it.
I'm not touching it. I'm not doing
No,
anything.
I mean, yeah,
I already screwed this up once.
So you've already 20x probably from where you're at then. So yeah, let it
Yeah.
ride.
Let her rip. Let her rip. I mean, you know, and that's the danger of buying and selling and picking and choosing when you're not an expert. And I should probably just withdraw that and give it to JT.
I will happily manage
That is
it.
a great idea.
I will
Or you
be
could buy your first property in Florida with it. You know, one of the two.
Yeah.
That's
Well,
true.
when
We
I'm
need
done
it.
with it, I just did my I'm in the middle. You'll appreciate this because you're in the private market. Someone's targeting my fund for an acquisition and they're doing their diligence and they wanted to see how the first dollar performed in these 26 months that we've been open. And it was 387%.
That's really good.
I love it.
Yeah. Yeah.
I love it.
They basically are just buying, you know, I don't manage a lot. So they're basically just buying me for the history. I can't really say much else, but you know, I was really happy to see that, you know, if you got into my fund day one, I would have almost done 200% a year. That felt really good.
That does feel good.
Yeah. Yeah.
I don't have a fund yet, but if you took my AI picks, you'd be murdering it in the public markets.
Yeah. It's above the S&P at least 15, 20% in the time that we've had the podcast, like, because they wouldn't have known otherwise, right?
Yeah.
I don't know off the top of my head, Brian, but there are a couple of apps for famous people like you that you could start your own strategy, make your picks, and people can sign up to trade
alongside you.
Yeah.
So I do want to do that. So Robinhood, which I've been talking a lot about on this podcast, you know, doing some trading on there. They're launching a social platform that you will have, you know, verified trades. I mean, they'll literally see my entire portfolio and they can, you know, copy my strategy. So I can decide to go public with that. So I think that'd be a good way to do it. Is there a certain app that you recommend that you've seen?
There's a couple, but I don't know if it's, you know, just a social. There's a couple that do stuff like that, but you know, there's like the Nancy Pelosi tracker, you know, that
I've seen that. Yeah. I mean, she's worth $250 million now, so she's done something right.
Yeah, well, she trades better than all of us. Like, let's be honest, and we all probably should just do that. But none are coming to mind that, you know, that say just have that pure social where an influencer could do it. But they're coming, which makes me, I want to ask you something because I find this fascinating. You know, you've done really well in business. And I bet there's a bunch of financial advisors that would kill to have you as their customer, but you've already articulated in this short little conversation that you do your own research and you like picking individual stocks, particularly with tech and AI built, and that you also are interested in robo and consumer-facing finance apps like Robinhood.
Yep.
And so, like, what's the future? You know, do you think, in your perspective, why are those things attractive to you versus a traditional, you know, advisor? And do you think the advisor world will have a shakeup?
So yeah, that's a good question. I actually do have a wealth manager, but I control about 90% of the assets under management. And that is the reason, I mean, I don't think anyone can outpick me. I mean, obviously you can get lucky or whatever. I can have a bad year, and because I am so concentrated, I do have years that are down, but I also have major upswings. So for me, I can stomach that huge swing, and I'm okay with that. I know I'm going to make it up in the following year. And I do think there is an industry shakeup, especially with this like Robinhood social thing. I mean, if I'm following the top trader in the world, you know, I don't know who that is, but like, you know, someone that's absolutely
Nancy
killing
Pelosi.
it on there. Exactly. So yeah, if I'm following Nancy Pelosi and she's making 200% a year, why would I want an advisor? That'd be insane.
So do you think advisors are too conservative?
I want to touch on a younger generation's perspective, right? So I'm just 10 years behind Brian. Every dollar that I made in excess of my nut, there was personally for me, my trust level is so low. There is a 0% chance I'm giving that to another human being. So like, I would rather go broke on my own, but I think the younger generation is
you believe in yourself
woken up. No, I don't trust the
You don't
system. I don't
trust.
trust.
Okay.
Like, for example, I was 350 pounds, right? I knew I had high blood pressure from Google. I knew I had sleep apnea. I knew I had all these things. I didn't need to hear that from another grown person. And I knew I had to lose weight and I had to quit drinking. So I did. And guess what? All of my problems went away. God gave me everything I need to heal. I don't need the system to tell me. I feel the same way about investments and
Because
about
you do your own research.
Yeah. Right. Right. I'm
Most people don't do
autodidactic.
that, or they don't do it correctly,
But young people don't trust like the people that came before us. I think we're at that cycle of culture, where everyone is looking for something new, something different because they don't like what they've been served. It all comes down really to the macro where people just feel like they're making 10 times what their folks made let's just say their great grandparents made or whatever, and they're 10 times less poor or more poor. They have 10 times less things and they make 10 times more money. They feel that.
That's the
And
reason
they
I think
know.
the trust is low. I think they need to make so much more money that they feel like they almost have to put it to work on themselves and go for that alpha, big play on some crypto or whatever it might be, because they can't wait around to get, 7% returns from an advisor, which seems like crap on paper.
Yeah, when you got someone like me putting out thousands of videos talking about how, some tokens are running 2,000%, when you say you do 7%, like they're not interested. They
Yeah,
don't.
7% seems really boring to me. I'm not
Like,
excited.
you pay 7% in slippage on some of these tokens. Like, you might lose 7% just to get in,
It's
right?
true.
So you have to at least make 7 to break even. So they're expecting, and that macro, environment, Brad, I think is what drives a lot of behavior as well. So I think the advisors are going to get shook up because people aren't looking for good advice. They need moonshots to hit so they can pay the bills. So investing has turned in my opinion, to a lot of hot air and gambling, not a profession
A lot of
that
gambling.
people like trust to go to. The only thing you can hope for is they're so indoctrinated by their employer that they just have the same advisor that does their 401ks if they're employed in 10 years. That's probably the best bet. Otherwise, it's going
I
to be direct to consumer distribution, just like every other vertical with the internet, especially with blockchain.
yeah, I think that's I being an advisor, I care about advisors. I care about the industry. It's provided a good life for me prior to being this, but it can't exist in its current form, because they won't do Brian. They won't do your stock picks. They won't let people over allocate to
I
a single
interviewed 6
stock.
people. Only one would let me do my own stocks. And every other
That's
person
right.
wanted to sell my Apple position, which has made me so much money. I'm like, what are you talking about? Sell my Apple? This is like the ballast of my life.
Yeah, so they're not doing individual stocks, they're not doing venture capital, and they're not doing crypto, and that's true
Yeah.
by and large to 99.9%.
The advisors hate crypto. They've missed out on the biggest boom in the markets in the last decade.
Brad sees
Yeah.
that personally. Do you know how many guys celebrate me and are like, man, but they never invested. So it's like, anyways.
That happens a lot, and I've got a couple of kids that are Gen Z, and they're at that college age, and they all have, Fidelity did a good job of going direct. They went to these universities, and I don't know how many they've done this with. I just know they went to the University of Kentucky, and they had this product. I think it's called Bloom. Okay, and you got this free account, and if you showed up at certain events or you did something productive, went to the library, went to the gym, you got $5 or $10 by Fidelity deposited to your account,
Oh.
and you could pick like a general stock fund or a bond or cash, okay, or something like that.
Okay.
And you could earn up to like $300 per. This is for college kids, okay, $300 per
Sounds like good. Sounds like
semester.
good beer and weed money. These kids are all in. I mean,
And so the kids that were, some of them would do beer and weed. Now the boy that, or the young man at this point that my daughter is dating, he saved his, and he upgraded to the Fidelity Robo, and he adds whatever a month, and he's building a
Yeah.
real account. Now, do you think he's ever going to change his behavior and go to a human
Not anymore.
You know,
If he's making 15% on the robo account, whatever.
and he had a good experience, right?
Yeah,
I mean,
exactly.
this robo Fidelity's genius.
Yeah.
You'll never forget your first. They made him money, and they gave him a seed.
Yeah.
And so I watch his behavior. I watch my daughter and her behavior, and I think it's a fascinating topic. I do think there's a place for humans, JT. I just don't think it looks like what it does today.
Yeah.
I think both can be a play, like the robo kind of AI aspect. I mean, the future of that could be insane. How much research and how fast it could do trades for me. I could just be, vibe trading with this AI tool at such an insane level that no one could ever keep up with. That's a human. At the same time, the wealth management team I work with is doing things that it'd be tough for an AI to do to understand all my accounts appropriately and help me build my LLCs in there and manage it all and different products and stuff like that. So I think there is some advantage once you are building wealth to have someone oversee it all.
Yeah. I mean, I got one. Like I said, I love advisors. I just think it's a fun topic, particularly with the three industries that we're in. There are things that they do, there are things that robos do, the thing that they don't. And
are you pitching your fund to advisors? Like, do you have meetings with them?
Oh yeah, and given the current regulatory environment, now that there's really no there's not severe compliance problems with, we're a registered product, private markets. It's still an adjustment to say, because they may say something like this: oh, we're already doing the private markets. And what they really mean is, oh, we're actually doing private equity just for a high net worth. When you pigeonhole them and you say, what about venture capital? Well, that's not a real asset class. That's catching lightning in a bottle. And I'm like, have you seen how many rich people are in venture capital? Where do you think the 10 largest, tech companies on the stock market came from?
Venture
VCs.
capital.
That's right. And then I'll say, well, okay, that's nice. How many households do you manage? 2,000. How many are ultra high net worth that are getting all your special sauce? And they'll say, 200. I say, okay, so there's 1,800 households. What are you doing for them? Nothing.
They're getting no private placement inside.
That's right. So the pitch is, why don't you do something? And we're the most convenient, because we're electronically traded on the FundServe network. So stocks are traded on the DTC, mutual funds are on FundServe, and that's the most convenient way to access across your entire book of business. So, that's the basic, play. It's good for clients. And I think clients are now going to start to ask a lot of questions. And Brian, they may have to go through 10 advisors to get one to say yes. But if you're that advisor, what an awesome tool to just start saying, imagine if I started my firm again and people would say, because this is what I would do. Say, Brad, how do you differentiate yourself? I'm like, because I will give you access to all the things. It'll be like fast food investing. Here's my awesome menu. You want some NVIDIA? I'll say yes. I will guide them on appropriate allocations, risk rewards. We'll document those things. But hey, have it your way, right? You want some crypto? You want some venture? You want some private? You want some stocks? You want some?
Man, you're hired. I want you to be my advisor. Let's go.
Well, because I work for you. Let me help. You tell me the ingredients.
Most advisors don't think that way. I mean, they want the money reoccurring up front. They want to, get their pay off each year. And
I'd want you to tell me your ingredients, and then me try to make the meal. Me say, okay, now here's how I think. I'm not going to argue with you over gold. You want gold? I think you have reason to want gold right now. Okay, I'm not going to tell you it's been a poor performer. I'm not going to poo-poo your idea. I'm not going to say
it wasn't until this year. I mean, you're up. You invest in silver. You're up 80%. You look like a genius.
I'm just going to build your meal, and I'm going to say, here's all the assets you told me you wanted, and here's how I'd allocate them, and here's why. And and I think that would be attractive. It's your 100%. Money, right? 100%. And then I think, see, Brian, you already said you'd hire me. I
would. I'm just that type of pitch, because that's the exact opposite of most advisors. Like, you should have 40% US and 30% international and 25% bonds, and I'm like, no. Throw all those away. I want none of those. Cut them all out.
What would you do with someone who's like, I only want crypto?
Who, me?
Yeah. Like, that's it. I don't want anything else. I just want crypto.
That's a good question. What would I do with that if I was an advisor? I think
If I were to
my
hire you, that would
How
be
would you
me, and then
react
I'll
to
be
that?
like,
well,
yeah, like
I think you're an interesting and astute person. So my first response, instead of pushback, is tell me more. Like, tell me what
What's
has
your
you?
thesis?
Yeah, like what am I missing? Okay. And let's have a serious intellectual dialogue. Like, okay, like let's tell me more, man. Tell me more. Um,
yeah, yeah.
and then I'd probably share my story. Like, why do I have stacks? Why do I not sell anything? Let me tell you what excites
You
me.
tell us your Bitcoin story, and you'd be like, "See,
Yeah.
I told you."
At
Yeah.
the end of that, I think I could get you to allocate some to things that meet your needs that are similar to your rationale and thesis on crypto. And I would say, hey, then
That's
if I
true.
can help you execute or hold crypto, we'll do it. But otherwise, let's be like Brian. If I talk you into 15%, then let me help you with that 15 because we've built that trust bridge because I didn't poo-poo your ideas.
Yeah.
If we had more money in crypto, we would do better. I had a conversation with ChatGPT the other week, and I was like, "How can I turn $1 million into 10 million in 5 years?" It said the only predictable way was to put at least 70% of my assets in crypto.
Predictable. It said that? That's good for JT. That's bullish.
It knows
Based
things,
upon
as
cycles.
do I.
mean, yes.
Yeah. If I could download my 10,000 hours into your brain, brother, I mean, you'd feel the same. I wish I could. I try. I make a lot of content. I try.
I listen to everything you drip on, and it worries me that you're right, and I don't have enough in crypto.
I don't have enough either.
That's one of my greatest fears is that JT's right, and I'm like, shit. Like my only saving grace is we're friends, and so if you're right,
and the private
and
markets.
well then JT can buy my beer since he doesn't drink, and he'll have all the money. So
Yeah.
So funny. He'll be buying.
You could build
buying the
build on
bourbon
my
for Brad for us, and
I would take all my crypto and park it in land and people. Honestly, that's what I want. So we can all live on my 10,000 acre estate, and you'll never have to see me if you don't want to.
If your estate's in Ohio, I'm not willing to join, but if it's in Florida, I'm interested.
Yeah. Well, vacation home. I mean, we're talking about me being right about potentially making. If I keep doing 200% on new money, just saying, I could be managing $1 billion with 100 million or 50 million, and I mean, the growth is crazy.
I love how private. This is where you're lucky. He's got this private hedge fund over there, and he can make comments like that. If I say one word about performance, even if it was terrible performance, like, hey, I'm going to do 6% for the compliance, would be all over me.
Yeah,
only you can talk about past performance, but not future. Or
I can't talk about past performance of my private funds.
Really?
I can. No, because they're not. You didn't have the exact GIPS certified audits and all. You didn't have all. It's all it's all what it is.
Okay.
You can look at there's telltale signs, but there's no we can't. The regulated world, the registered world, it's like that word, you just don't do it. You got to talk strategy, and you got to talk. Well, I can tell you about companies that I'm bullish on. I can tell you about industries, like you and I are both bullish in different ways on AI. And we can talk about stuff like that. But other than that,
let's talk about fair market value of NVIDIA. Number one company in the world, over $4 trillion. I mean, their backlog on their current chipset is absolutely insane. Do you think that they're going to be 10x in 5 to 10 years, or where is your head at?
What would that performance be? And if they were to 10x in 5 years, that feels so. Whatever it is, it's.
I mean, they'd be a $40 trillion company, so I mean, it's bigger than anything anyone else can fathom. But I don't think it's actually that insane.
That's the GDP of America currently.
So at some point, there's a terminal velocity and a terminal size. I've heard this pitch before. I'm going to tell you when it was. It was 1999, and it was. I'm not bullish on America. I'm not bullish on AI. Of course I am. I mean, there is no global future in our lifetime without that. But there are some realistic conversations to say, wait a minute, is there not a terminal size? Is there not a terminal velocity? It's there's
I think the
some
velocity is capped by energy.
Well, I don't know what it all is, but to me, to think that what you'd really be saying is that the old business cycles no longer ever apply, that other than really short periods of time, everything's going to go up and to the right just because of this promise of this one thing. I said this before on another podcast. I don't know if this is true or not, but this is anecdotally how my head thinks about the value perhaps of AI, which I do think is undervalued today. I don't know that
Undervalued.
It is today. I think there's room to grow, and it's
not
because
the AI stocks, but the underlying aspects of AI. Is that what you're saying?
I'm just saying the underlying value of all AI assets, public and private, is undervalued.
Okay.
So I think there's good time for people to buy private AI companies for sure, and there's still good time for people to buy public AI. But I don't think that 10x in 5 years. I do. AI makes me
I'm going
think
10
of
and 10. That's where my head is.
It reminds me of real estate. Real estate has been a very valuable asset for America for a long time. And I think the reason is very simple, because it touches every human.
Yeah, you need a place to live.
You need a place to work. You need a place to play. Live, work, and play. That all is land driven. That's all building driven. Okay. I mean, there's a big real estate thing, going on now. But AI is the same thing. It's not like a niche tech that says, well, this is just for people that this is for the auto industry. AI is valuable
for every
for
single
all
human.
the industry, just like real estate. So, again, there's room to run if you look at the value of real estate versus the value of AI. How much room to run?
All right, so interesting you mentioned that, because just taking a random stat, there's about 800 million weekly users on ChatGPT. There's 8 billion people on the earth. So in theory, if everyone were to use it, we'd have a 10x just on the users, let alone the actual inference needs that are going to happen to make all the queries in the future. So that is the reason that I'm thinking 10x. I mean, we could only 3x the amount of users, let's say, in the 10 years, but those users would use 3 times the amount of data, actually more in my head. So then we're going to need 10 times the amount of chips, and they're going to be replenished at, such a crazy rate to keep up with the top performing AIs. I don't know. That's what I was thinking.
I would say if that was true, then the largest companies in the world would be the cell phone manufacturers, because I don't know how many. I think there's more cell phones than toilets and people combined, and so we could use.
Do you know who the second richest company in the world is? Apple, the number 1 cell phone manufacturer.
Yeah. So I'm not saying that's unreasonable for, say, NVIDIA to be valuable or AI, but it should be on par. I think that's a great comparison that you made just there, and that has been a good stock, admittedly, and it will. But I don't know that it just starts to separate itself to this new stratospheric. I don't know. I feel like we'd need another civilization to sell this stuff to. But I think that is a good comparison that you just made. I think the real estate stuff's a good comparison. I think the oil companies is a good comparison. And I think it can be more valuable, or a company in the AI space. Yeah. Maybe there's something we're not thinking about. But I also believe there is only so much we can consume. We only have so much money. And so unless that's being created,
or we can print more,
then it's not real.
Is money real anyways? What are we talking about? Come on.
Yeah.
You don't believe in the full faith and credit of the U.S. government?
No shot.
I believe my dollar has worth, and it's recognized as a value. No. But I don't believe it's not manipulated.
Yep.
That's why I only want crypto. They can't control it. So
JT's a crypto god over here. You give him $1, he's gonna mint it into crypto in a second.
Yeah, I will turn down that dollar, and I will only accept Bitcoin. I will take a Satoshi.
I was going to say, send him a Satoshi. I'll take his $20 Satoshi all day.
I'll take a SAT, please. SAT, please. Yeah. Now, I also, just to take my perspective on what you had said, if in 10 years NVIDIA is 40 true, one of 2 things also must be true. One, the entire dollar ledger would have to also, for NVIDIA to stay proportionate to the current market, let's just assume that happened, it too would also have to to X, and it's currently 434 trillion if you include derivatives. So
I wouldn't assume it's going to stay with the same proportion, though. I mean, the fastest growing companies in the world are always going to be disproportionate, in my opinion.
Okay, so then maybe at 2X's, but you're talking a number that I don't know off the top of my head, which would also then make
so if the whole world 2 or 3x, then it only needs to 3 to 4x to get there.
And at our current GDP rate, that would make our debt to income ratio north of 350%. And we would look like Venezuela in that scenario, or Zimbabwe. And we would be in a hyperinflationary environment, if that were true.
I love each one of our perspectives. You know what I mean?
Yes.
Like,
it is good to think this thing's true. What has to be true to make that true?
Well, hey, this is
That's
how
my job.
This is how I sell diversification. Is it's not fair for any one person anyone that's in their own little vertical or managing their own money or other people's believes in their vertical. You wouldn't give a nickel to someone who didn't believe in their vertical. And the reality of it is, I am never going to get to where you are, Brian, in your vertical, and you'll never get to mine, and neither one of us get to JT's.
Right.
But again, what I want to give you both money now, because you've got me convinced enough that I want to diversify into it, Brian, to your point, explosive growth opportunities.
Yes.
You couldn't sell me on a muni bond fund.
But who's buying debt right now? That's this thing you could do.
Oh my God. So
indirectly,
funny.
I think you guys are arguing for a little bit of diversification. I think that'll make us all happy. And maybe it's Brian's, it's somewhere between 80% I'll do my way, but 20% maybe I'll start parceling out and do other people's ways that are convicted on an explosive growth thesis. And I think that's a fun way to diversify, because then but yeah, I think that's what we're talking about here.
Well, I haven't started a hedge fund yet, but I have talked about that's something I'd be interested in the future. I know how to
operate funds.
Yeah,
I can
I've
do that
heard
for
you
you.
Started a couple. All right.
Yeah, we can do that. We can work on that. You're
and
getting
JT's got a lawyer in his team that can spin up a fund too, so we got our bases covered.
Good.
Yeah.
And your fund is so exciting. Where should people go to learn more about it?
There's a couple places. One, if you're within, if you're local, you can always, come direct, and you can meet me in person. Our website is a great place.
Covington, Kentucky, everyone.
Yeah. But I tell you what, if you look at a 2 hours drive, we're around a lot of people in America.
That's true.
Right. That's right. Our website, www.conneticventures.com. We update information every single day on there. You can get information about me, our team, but more importantly, the portfolio companies, because the excitement about the private markets is we're investing in the companies of the future.
Yes.
And that's really what exciting. I'm also pretty active on LinkedIn. I try to respond to all direct messages. I give my email out publicly, bzapp@conneticventures.com. You also could get that on LinkedIn, and those are some great places to interact with us.
That's awesome. And will they find Wendell on connectventures.com too?
They will.
All right. I want more people to go try the Wendell and see what their company's valued, if they might be a good fit for an investment from Connetic Ventures. That would be super cool.
That's right.
Please train our buddy's model, please.
Yes, there you go.
That's awesome.
Thank you. I've enjoyed this, fellas.
Well, I hope more people connect with you so they can learn more about your fund. So look up Brad Zapp, Connetic Ventures on LinkedIn. Shoot him a message. He will do his best to get back to you, and you can check out what your company's valued using their Wendell AI. So cool. You've been an awesome guest, Brad.
Thanks a lot. I've enjoyed it.
All right. Cheers, everyone. Have a bullish day. Keep on all your bullish ideas and stay diversified. Cheers.
See you guys.
Bulls. That's a wrap on today's episode of Bullish and Beyond. Remember, the market never sleeps, and neither should your ambitions. Whether it's stocks, crypto, or just leveling up in life, stay focused, stay bullish, and keep charging forward. Keep your energy high and your mindset bullish. This is Beery the Bull, your AI co-host, Brian the Mac Man, and JT Knows Things signing off. All content published by Bullish and Beyond, LLC reflects personal opinions only and is provided for informational purposes. Please conduct your own research and discuss with your accountant and/or financial advisor before making any financial decisions. The information presented should not be taken as financial advice. We are not financial advisors. Nothing you hear, see, or read in our content should be considered as any form of financial, investment, or legal advice, or a solicitation to buy or sell any assets, or to make any financial decisions.